Greetings, Dr. Jeffrey Scott here. This is my weekend market update for June 25th, 2023. It may come up on the 24th. We'll see what time I get to post it. I titled this A Pause to Digest or something more. I think, for the first time in a number of weeks, I think we're at sort of a decision-making time based upon the market, not just based upon the news. My email address for any questions, comments, remarks, especially constructive ones, is hgsidoc@gmail.com. And if you're new to my channel, hit the subscribe, hit the alarm. You'll know when I post these. There's not really a time that I put them up there. It really depends on my life schedule. And I have special events that I'll announce sometimes, which you won't be aware of unless you get notification through YouTube. And hit the up thumb or down thumb based upon your feelings about the video. The more people that actually comment, the more likely they distribute this. So without further ado, let's get started. If you're new here, it's probably going to be about 40 minutes all in. This is for education purposes only. Anything I talk about in the spirit of education, not investment advice. I am a doctor, not a broker. I'm a cancer doctor. I give chemotherapy, not investment advice. I am not affiliated with any software vendor or trading company. The tools demonstrated are those that I use in my daily trading. I have paid for all the tools that I demonstrate. Trading involves risk. You are solely responsible for any investment decisions you make. Coming up soon, sooner than 29 days, is the Wealth 365 event. This is the code to sign up. I will stick it in the remarks section. And I'd really appreciate if you take the time to sign up under my name. I don't get anything, but it's an honor to be chosen to speak there. And I like to show that at least I bring a few people with me. Major markets tell the story. Now, unfortunately, in this tool, HGSI, which is a great tool, it looks at 5 days, and this was a 4-day week. So this is going to incorporate some of Friday last week, and I think Friday last week was down a little bit because all the numbers are a little less bad when you take out the 5th day. However, the direction doesn't change. The Russell, I think, is down 2.8 on the week. It's down 3.7 over the last 5 days. You could see the NYSE, another broad index, is down 2.3, 2.2 on the Dow, 2.1 over the 5 days on the NASDAQ, and 2.1 on the spiders. On Monday, Tuesday, Wednesday, and Thursday, when I did my videos, I basically said it felt like it could have been worse. Friday was a little bit worse, but when you put them all together, we had comebacks in the afternoon on both days. Is this just a little digestion of what has been a multi-week run? We'll talk about how far we've moved in a moment. And I think that's very possible. But I'm also concerned that there's something more sinister going on, and we'll talk about that. If we look at the movements off the 52-week lows going back to October 2022, Spider still up 24%, the NASDAQ 33.7, the Q's up a whopping 42.60, a double bull market. Diamonds and your NYSE a little bit below 20, and then the laggard up 11 in what is basically 8 months is the IWM up 11%. So really a bull run in the market. You could see pretty much broad-based weakness. Now this is a tool that I haven't shown before, and I just wanted to call it out because it's something that's now become on my desktop every day during the market in addition to some of the other tools. I don't have anything to do with the guy that did it actually, except I paid for the tool just like you will too. But his name is Nick Drendel, stocktrickswithnick@gmail.com. I find this tool to be very interesting because intraday it's going to tell you of some of the major industry groups, what's working on the 1 day, how it's changed from the open. But it's really cool up here is it tells you the moving averages on the major indices, the slopes of those moving averages, and then what I like here, the closing range, where the lower the closing range, the closer to the low it closed. How many stocks above the various or below the moving averages, and new highs, new lows. So this has been a tool that I find very useful. And you'll notice, especially when you look at the short time frames, there's lots of red, and that just tells you and emphasizes the weakness that we saw. So I like this. It's like $45 or $49. Highly recommend it. You don't need any data feeds. QEdge is another tool I use. This is from Sager, superiorprofit.co. And, you know, it shows me weakness. It shows me here 50-50 or 56% of stocks are below the midline of their Bollinger Bands. That doesn't upset me too much. I'll put that as sort of neutral. But on Friday, and frankly, if I look at 5 days, again, going back to the prior Friday, all sectors are down. The vast majority of industries, 92% and 81% of stocks are down. So if you're a mostly long investor, you probably found it difficult to make money over the past week. Now, what had been very strong in the market has been weak enough now to flip to mostly red for 2 weeks. Over 4 weeks or a month, the market's still favorable. So clearly over the last week or two, and probably coincident with the Fed meeting and the talk about two more raises, the markets have clearly weakened. Now, this week, interestingly, the 10-year and the 30 both dipped a bit despite the Fed hawkishness. So it still feels like the market participants are watching what the Fed does. And what they did so far is they did skipped a rate at the June meeting rather than what they say, which is two more raises longer before there's a cut and more resilient inflation. Breadth, you'd expect the market's weak, so stocks above the 200, stocks above the 40, which are the white lines, the spiders in yellow. The 12-week new high, new low, all showed weakness as breadth eased as bulls stepped aside this week. And again, we still have the question, do we have a recession in our future? And I leave it as a question. There's no such certainty. Do I think we have a recession? Yes, I think we'll have a recession. It's just based upon the past. Do I have clairvoyance and I can see the future? No. But it makes me not overcommit to the long side. What do I see here on the 10-2 and the 10-3? Every time you dip below the black line, going back to the 70s and 80s, you saw the gray bar, which is the recession. Does it have to be? Can it be different next time? Sure, it can be different. But I found myself historically, when I say it's different this time, usually being wrong. In the lower right is the Fed Diffusion Index from the Philadelphia 3rd District. And when it drops below minus 20, we always either are in or get a recession. The interesting thing is we did drop below minus 20, but we're now above it. So maybe that mitigates some of the risk. And over here, the Bank of America U.S. High Yield Index Options Adjusted Spread is a measure of credit tightness. And before the last several recessions, we did see these start to peak. It's not doing much, so that's a positive if you want to be in the no recession anytime soon camp. Will we get a recession? Of course we'll get a recession. I'm talking about, do we have one coming within the next 6 months? It would be very safe for any pundit to say that we're going to have a recession. It's how soon and when, because recessions happen. Again, 56% of the stocks below the midline of the Bollinger Bands. This is done in Edge Rater. And I'm starting to see a few stocks below the Bollinger Bands. But when it gets to 30 or 40% of the stocks in the S&P 1500 below the Bollinger Bands, I'll pay attention. We're not there yet. Hindenburg, Omen, a couple things to point out. We actually fired one on the NASDAQ on Wednesday. Now, typically you don't see these until you hit new highs. So I find that to be interesting. I will tell you that the interpretation of the Hindenburg Omen is you have to have two within 30 days to confirm. So we've had one. And I'll also tell you that I have multiple platforms, and it fired in Edge Rater, but didn't fire in the others. So I think whether it fired or not, it just tells you we're in a market that's toppy, where some of the pros are exiting, and us small guys are still buying and changing control to weak hands. But no, what it does say is that the new lows are increasing on the NASDAQ. We actually popped up red on the NYSE. We keep our eyes open and aware that this market could weaken. On the week, the market was down. Using the fundamentals and the ranking from the prior week, we could see that there were a couple peaks in some of the lower quality names. This is ERG versus return. The higher or lower is a return. To the right is from low ERG to high ERG. ERG is a combination of earnings per share rank, relative strength rank, and group rank. And also notice that this doesn't say 1, 2, 3. It's close to 5% on a lot of these numbers. If you look at earnings versus return, here was one blip, but for the most part, didn't matter what your earnings were. Relative strength, the worst relative strength stocks did the best. So weak, a week in the market. One with two E's and one with EA. Know your news and earnings. So it's not a quiet week for news and earnings. Well, it is for earnings. On the news, Monday's quiet. We got some consumer confidence and Case-Shillers on Tuesday. Wednesday, we got some wholesale inventories, but look who we got speaking on Wednesday. Powell. Look who's speaking on Thursday. Powell. Plus, we got some jobless claims and pending home sales. If it's 2:30 a.m., I wonder where he is overseas. And then one of the Fed's favorite measures of inflation, the PCE, is on Friday, and that's something that the Fed watches closely. So that alone makes it an interesting week. We're near the end and about to start the next run of quarterly earnings. I'm going to be looking at Carnival. It made my list of stocks to buy for the week, and I can't buy it till after earnings come out, which are before the open Monday. But the cruise ships look really enticing. Royal Caribbean's had a big run. I think Carnival and Norwegian perhaps are in better buy places, unless you like chasing the leader, which works too. But it'll be interesting to hear what they say about demand. They've always been a lower cost travel. You got to like them or not like them. And maybe now, with the inflation on hotels and airfare and rental cars, that lower cost will give them pricing power and still make them attractive. A number of other earnings. So even if it's a quiet week on earnings, you've got to know when your stocks have earnings because it's a judgment call to hold them over earnings, and it's just bad judgment to not know when your earnings date is. Again, please go and click on the link in the remarks section and sign up for Wealth 365. Still waiting to figure out what my slot is. I will have a slot. It's a great event with a lot of great speakers. So multi-week rally ended. Orderly pullback so far. Frankly, I felt like it could have been a lot worse. Hawkish Fed, rates rising worldwide, slowdown in China, concerns about resilient inflation are not really the ingredients of a bull market. But markets like to climb a wall of worry, and we've been climbing it for weeks. Large cap growth actually outperformed the general indices again. FANG stocks look good. However, when I looked at my top 1,000 charts, which I do on Friday night, I saw a lot more weakness than I've seen over the last several weeks. Now, when you look at where the strength is, it's kind of interesting. Home builders look great, and I sort of pontificate about why maybe new homes are doing well in a tough rate environment. And just to cut it short, the reasoning, no one's selling their houses. For example, let's say I bought a house for $3.5 million in 2021, and I could sell it in Florida tomorrow for $6 million. I'm going to generate some taxes. Now, let's say I immediately roll it into a $6 million house, because why would I downsize or get a lesser quality house? Now my tax basis that I pay the state real estate is at 6, not at 3.3. So that's going to cost me money. If I had a mortgage and my mortgage was at say 2.5%, why would I want to sell a house with a 2.5% mortgage to buy one that'll have a 6 or 7%? I don't think anybody's selling their houses. They said last night on the TV here there's 60,000 short in houses. Well, the only way you're going to get those houses is if Pulte and Lennar, Toll Brothers, and the private guys build, and that's what we're seeing down here. I did see some strength in other infrastructure plays. Cement we talked about last week, some of the big construction, pollution controls, electrical. So that's probably what's driving the industrials. So I took a little off the table, still more long than short, but with cash waiting on the side. I'll likely take profits again this week going into the PCE report. and Powell has two scheduled chances to hurt the market. So now let's go into wealth charts. A lot of people ask me, is this the only tool I use? And the answer is no. I mean, like many folks, I use multiple different services. I have TradeStation and Thinkorswim and Tasty where I do my trades, so I have each of their platforms. I think TradingView offers some very nice things from a fundamental perspective. And then I use HGSI from a screening perspective. Some people might use FinViz or something else. The reason why I concentrate on wealth charts during these videos now is because of how easy it is and because of the incorporation of the tools that support my trading. And when I teach new people to trade, I like to go where it's easy, and this makes it easy. So if I look at the hot stocks to start, the things that are really starting to move. Now UVXY or volatility moved, but it's still less than zero, so I'm not too worried about that, although I should pay attention. Healthcare had a big move, and that's interesting because healthcare has been relatively weak. If I look from the perspective of the 4 days of the week, so this would be Friday, Thursday, Wednesday, and Tuesday. Tuesday gap down at the open, and then could have been worse. It traded up and closed right below where it gapped down. On Wednesday, gap down, traded down in the morning, and then traded up most of the morning, and then had some weakness in the afternoon, perhaps related to some Fed testimony, Fed speakers. On Thursday, we gapped down and then traded most of the day higher, finishing up on the day. And then on Friday, we gapped down, and it looked like a repeat. We ran into that 200 period moving average and didn't move any higher the rest of the session. So that's why on several of the videos I said it could have been worse, because each day we gapped down. Instead of crapped, we actually rallied. If we look at the daily charts, you could see that we have 4 bars really tight coming down with a gap into Tuesday, Wednesday, Thursday, and Friday. So that's the spiders. Is that a weekday? A week? Is that a week? Absolutely. If we look at the weekly bar, you could see. But then again, it's an inside bar. It was relatively orderly. Volume's going to be high because it was options. Well, I had some options expiration. I don't think it was the main options expiration. But that's actually, that's the spiders. Now, if we look at the NASDAQ, the Qs, very similar pattern, although you had, look at that up day that we saw there on Thursday. And Friday, we actually closed above where we opened, but we're down 1%. On the spiders, we're down 0.76. On the diamonds, we traded down on the daily down to the 50 and have a doji there. Perfect setup for a reversal on Monday. Does that mean we're going to reverse? No. If not, then I would look for a visit down to the anchored VWAP. On the IWM, which has been the weaker one and the only one that's below its anchored VWAP off the 22 highs, breaking down but sitting again at a nice place to consider a reversal, which is the 200. And then if we look at the UVXY, actually see if we got the VIX the whole time. Yeah, and we do. And you can see the VIX on Friday has a green bar up 4%. But on the week, the VIX was still down quite a bit, down 0.74. But look at the bottoming tail. Does that mean we've seen the low on the VIX? And we know when the VIX is low, you look out below, meaning the markets are at risk. But it's not really at risk until the VIX is rising. So keep your eyes on the VIX. And the dollar is bouncing here off of its lows, but sort of in a congestion zone between the 200 and the 50. When I look at the commodities, with the dollar showing a little bit of strength, no surprise that gold and silver are down. Notice silver has pulled all the way into the 200, much more severe of a drop pullback than gold, which was actually up a tad on Friday, but quickly lost it and closed near the bottom of the day. Oil's definitely in a congestion zone, and someday natural gas is going to actually persistently go up. It was up 5.3% on UNG. If you own some Boyle, you look like you have a lot less shares because they did the famous reverse splits, which is never a sign of strength. If I look at the 10-year rates, kind of just going sideways, and you could see if I flip that to a weekly, that it just came down just a teeny bit below on the weekly, down 0.8%. So sort of holding steady on the 10-year. So when I look at that, I see orderly pullback. I see nothing that says this market's going to implode. Saying that, I think considering my concerns about recession, my concerns about the Fed, I am leery of whether or not we've got more than just a little bit of digestion here. Weekly market signals there's a change. In fact, well, it's almost a change, so that's interesting. So if we look here at the spider, the Qs, the diamonds, and the Russell, I'd probably change that one to a yield sign because I think we have to be careful on the Russell. And the reason is because it's just above the 30-week WMA. And both the diamonds and the Russell are on the verge of flipping their bongos. So my weekly timing model, which has been in a nice positive since the beginning of March, requires price to be above the 30-period moving average, the WMA, and my bongo indicator to be green. Right now, all four of them are there, but we're very close on the IWM from a price perspective, and from a bongo perspective, I know from other platforms we're close on the Russell and the diamonds. If we look at sector strength, um, communications, technology are still doing well. Discretionary is doing well. Um, if we thought the market was going to be dying here, we'd expect more out of staples, real estate, utilities. We don't see that. We got discretionary, we got technology, we got communications, and we have some industrials, but I think I'd put them in the middle and better than the weakness that we see in energy and financials. But materials and industrials, I'd say, are the middle. The top is technology, communications, and discretionary. Healthcare, if we look at XLV, looks like it's starting to move. It's still early, and biotech actually weakened as the week went on. So if I go into my bull scanners, we'll look bull and bear over the next few minutes. The reason why I like my scanners is because I like to have my job easy. And my job is to look at 11 or 12,000 instruments in the market and find those things on Sunday that I'm going to suggest to you that you might want to be watching. Notice I didn't say the word buy or sell because I'm not here to give investment advice. I'm here to show you how I use my specific tools and maybe give you some places that you can go looking. So I know if I look at Wealth Scanner, just to get a sense of what's working in the market, and this is sort of like the relative strength tool in wealth charts, and I apply it to my group of ETFs. First thing you notice, we've gone from the whole bar being above 800 to just one thing, which is a small cap ETF, S&P 600. And we still got home construction, healthcare with the flames, but now that's it in the top 600, 700, up to 850. That tells me we've had dramatic weakening in the marketplace. And even when you look at the small cap, it's had a couple of weak days, but it's still holding the bottom of this gap. All right, so let's go back to my CAT scanner. Now, am I overly bullish here? Absolutely not. I am concerned about this market, but if I had to pick a direction, long or short, as of right this moment, well, if I was going to tell you short, I'd be a heretic because I have mostly long positions. But what's happened is I've built my cash position and I've been very careful with my position size. So if we look at pullbacks and uptrends, which are my favorites, so to be a pullback and an uptrend, I've got to look at your weekly and see that your weekly, at least short term, is heading up. It is. So if the weekly is heading up, that's a positive sign. And I'm looking for this little pullback or pullback in the short term. And to see that, I'm going to find my daily bongo going red within so many bars. So let's take a look at some stocks. ABCM, we talked about this, I think, on Wednesday. Maybe it was on this day as a big leader, which would have been last weekend. Don't know anything about Abcam. I think it might be a pharma stock, but I'm interested. I'm interested because it's had a breakout on massive volume. It's got good momentum. Look at the nice fanning of the moving averages. Look at my volume, breakout, and momentum indicators. It's in a wealth signal and an EMS buy. Look at relative strength and OBV. So Abcam might be one you might want to take a look at. It's already run a little while. I'd rather buy in the pullback like we saw here. The next one is, let me just rank by dots. Okay, KMX I wanted to talk about first. Now, a lot of the car roll-ups, and a lot of these do used cars, are showing some strength. Don't know if that means used car pricing is good, but these are stocks that have really come up. Perhaps it's just they have supply. But look at CarMax here, a buyable gap up on massive volume, breaking out from congestion, good momentum. Notice the recent pullback here to the 17, my EMS signal, relative strength and OBV. So that's something else that I think looks good. And I'm not a gun owner and I won't get political, um, but maybe it's time to be buying Smith & Wesson brands. Why? Stock was going pretty much sideways. Here's your pullback. You can see over a longer period of time, it's definitely going higher. Look at the relative strength in the OBV and a massive breakout on Friday on massive volume. Now, let's see what happened. And they had 32 cents versus 27, 18% beat. So the earnings drove it higher. Now, someone would say, but Jeff, your high jump bar is 100%. Sometimes you got to use your eyes. Is this extended? No, it's not extended. Why is the number high? Because the stock's gone nowhere for months. And it is barely above the 50 in the 17. And what's happened when it goes sideways like that for a long period of time, and you've mostly been in squeezes since February, the range of the high jump gets very tight, so just a small blip above that will trigger. So I use my eyes. That one doesn't scare me. Abcam we looked at. CVT is a takeout. Mueller Industries, I believe this is in the water infrastructure world. And again, it fits my pattern. Big volume, breakout momentum. The daily bongo flip from red to green. The weekly bongo is green. Relative strength at OBV. Brown and brown. Last week I talked that insurance looks strong. I don't like the topping tail, so I probably would move on. And DocGo is a stock that I don't know anything about it, but it's got a nice pattern here, a nice steady move up. Look at the weekly. Here's your little pullback. Volume and breakout had two momentum bars here. Relative strength and OBV look great. So there's a number of things there that I like. So typically I will go through the list on my own. I did like SOVO Brands was another one. Don't know this from Adam. I'm just looking at the pattern. Clear uptrend. A little bit of a pullback here. You can see the red bongos came out of it with a momentum. 2 hours of breakouts and volume, relative strength, and OBV look good. So it's funny, even though the market is tough, there are stocks that look attractive. AlphaTech is I think they make clothes and stuff when you have infectious issues. They were big during Ebola and monkeypox. Maybe there's something coming. It's still congestion to me, so I wasn't that excited. So one thing to do is to look for those pullbacks and uptrends. How about stocks that have been just beaten up and now they're starting to move? I use my bottom poppers to find them. And which ones have three dots? BJ's Wholesale Club. This one is also very interesting. I want to do a little research and maybe look at what happened here. Buy target 85. I like that. Lowers to 80. Lowers to 72, 77. Well, we're at 61. All those numbers would be a big move. I don't know if there must have been an earnings right here. Yep, 85 cents versus 85% estimate, so they hit their number. So I don't know what the surprise was. Maybe there's whispers. Why do I like this? Because it's gone sideways. You could already see on the weekly um, that it's not moving up. Remember, these are bottom poppers. I don't require the weekly to be red. But I'm looking for stocks where the daily bongos turn green, the weekly is red, and here I've got volume, breakout momentum, starting to see some relative strength in OBV. I thought BJ's wholesale looked good. And here's one I like their close. Let's see if I like their stock. Zegna. And again, not a breakout leader, but a stock that's been selling off, that's showing some life, had massive volume, breakout momentum, and look at relative strength in OBV. I could look at rockets. Rockets are stocks that all I require is them to have both bongos working. CarMax, that's a rocket. In fact, it launched. Smith & Wesson, less likely a rocket, but you look at the weekly, that's straight up. Abcam, look at the weekly, straight up. So it's specifically looking for these stocks that are starting to move. And one that was interesting to me, you can see that Generac, which is one of my longtime favorites because I live in Florida and everybody has generators, has broken above the 200 on volume, a little bit of a pullback here, breakout and momentum, excuse me, volume and breakout. The momentum was a couple days ago. I'm going to be watching Generac. And then the other pattern I look for is called Momo Up, which I don't even care what the pattern looks like. I'm just looking for stocks that are having momentum. And what came to the top was GSK. Now, GSK is really in the midst of a longer term pullback, and you could see the monthly bongo's been red for some time. The weekly just turned green and the dailies turned green. And notice it had a gap on volume with breakout and momentum, relative strength and OBV. I have less conviction on these plays because they're not in an uptrend with a pullback, but a lot of the stocks that we like are having a lot of the dots. So some of these will make the other characteristics. Haynes Celestial Group is another one that doesn't meet any of my criteria. It's clearly in a downtrend, but it had three dots, and I don't think I would go after this one. It's got the 50 and 200 right above. Now you might say, but Jeff, aren't I bearish here? I'm not really bearish. I'm not really bullish. I'm more neutral and cautious. But if I look at my top-down indices to the bearish side, silver, which we looked at, is sold down to the 200. International real estate, okay. Gold, down. Dividend stocks, energy. So kind of the places that have been weak for a while. I could apply my CAT scanner as well and look for bearish retracements in downtrends. And let's just see if anything comes to the top that's in Avon Grid. And what I'm going to look for are stocks that have been in a downtrend that retrace up into the bottom moving average and break down. I don't like having moving averages right below because they happen to often act like support. Here's Analim Pharmaceuticals. Here's one that's in a downtrend, pulled in, failed at the 200 many times, broke down, and now it's not holding the 50. So this guy's got a lot of resistance right above. Had big volume, breakdown on momentum, relative strength and OBV breaking down. That might be something. AstraZeneca, boy, the stock's been a strong uptrend and a leader, and I don't like shorting stocks that were leaders. But this is one that I'm going to watch. Um, See if any of these are the ones that I put on my list. Tandem was one of my big time leaders in the past. You don't like to see this fail right at the 17, but again, this is a stock that's pretty beaten up already. Now, I did find when I looked at a long list some stocks that I thought were more interesting for shorting. I'll start with AVGO. Now, this looks just like one that I just showed you, where it's hard for me to short strength. But when you look at the fundamentals on AVGO and you look at their earnings per share growth, you got to deal with folks saying still maintaining a buy with a target of 840, but look, it's not much below 840. So here's a stock that broke down the 17. It's 120, 130 to get down to the 50. That might be one that's interesting to look at. Align Technology, not yet because it's still above the moving averages. Axon, this was such a big leader. This is what I'm talking about, failing at the moving average. Now it's getting darn close to that 200, so this is a list to watch from. Biogen IDEC, getting too close to the 200. That's a natural bounce perspective. So I went and I looked and I built a list that I'm going to watch as the week goes. Here's one that's already broken down, but boy, does it have potential to drop quite a bit more. Solar Edge. Am I advocating you go out and short right now? Absolutely not. I think that we have to see what this market's going to do. I'm not totally convinced this market's rolling over, but I always build this list, just like I build a list of longs, so I can look at it and get a sense if the type of stocks that I like to buy or short are working. On the long side, it's hard not to keep looking at Apple going to the moon. You'll see the exact same pattern. If you look at Meta, which is just unbelievable, the two monster leaders of this market. I think that Amazon is trying to get into the same group. It just hasn't run as much. I talked about it on the Thursday video, and I think what I called out that I really liked about Amazon, and of course, here we go, the seasonality starting on, if it stayed there, the week of June 21st, which just passed. Let's move it up 1 week now. And ending on the end of August, 7 out of 10 up. The losses are modest, 3 to 6%, and 13 to 22% on the gains with an 8.24% average annual return. And one thing I really like is I could actually take my buy watch list on wealth charts, and I can look at over the next 8 weeks seasonality, and Mira, which is one of the Bitcoin miners, and not one that, well, it's one that I'm interested in. It's in my buy watch list. Mira, MicroStrategy. After I talked about them last week, one of my friends, who's the Moxie trader, said, don't forget HUT. So let's just take a look at HUT. And try that again. Wrong keyboard. HUT. H-U-T. HUT mining. And you could see the strength in HUT, which is broken out. This is a relatively cheap stock, so it's like buying an option that doesn't expire. But I don't think I'd call that a cup and handle breakout, but it's broken out of a pretty long base. And whether you're looking at HUT, MSTR, which is MicroStrategy, which I've been playing, these stocks, this one broke above its resistance here. These are going to be very much tied to Bitcoin. And the thing about Bitcoin is, let's see if I can pick up a ticker BTC. Bitcoin looks like it's breaking out here, and it just took out those prior highs, prior closing highs it's right at. It'll be interesting to see if Bitcoin can make its move. I'm watching Bitcoin because I have long MicroStrategy. So in the last 45 minutes or so, I've given you a bunch of things that I'm looking at, longs, shorts, and a number of other interesting opportunities. I think as a top-down investor, it's all about the market, and let's see what the market does. Please register for Wealth Charts, the Wealth 365 event, and we'll see you next week. Thank you.